Good afternoon. Welcome to Options Tender. It is Thursday after the bell, 112:23. Welcome, everybody. CPI was a dud. If you remember at the yesterday's video, right towards the end, I had mentioned, well, the market, everybody's expecting a huge move, and the market could just stop dead and it's flat because of the CPI coming in line, and so be it. That's what happened. We had a quick reaction, but everything just pretty much virtually didn't move at all. So, what does that say? And I hate to keep repeating myself. This market feels firm. I get it. I get why people would think of this as a inverted head and shoulder, that we're getting ready to go into a bull market. And hey, we might be. Maybe this is the end. But the bearish stance, everything, the thesis, nothing has changed. We are still bearish. And by the way, if you're new here, go down to that bottom right hand corner, hit that Options Tender logo and subscribe. Okay, we have bank earnings tomorrow, so I'm going to check out XLF. We're going to do a quick analysis on that at the end of this ES. We're going to do on multiple time frames, maybe poke around a little bit, VIX, and yeah, we'll go from there. So let's start off with ES on the monthly time frame. Nothing has changed. Right at the 8 EMA, we have to close above it. We have to break above it. Okay. So listen to some of the other videos if you want more in-depth analysis of each of these time frames, because I give a big bearish picture as well, and I'll tag it up top. I'll put a card up top so you can click on that link if you want to hear it. But here we are in the weekly time frame, and clearly we're right at that downtrend. We tapped it, just kind of holding off. I think earnings. I think it's looking for the bank earnings to make a move, and perhaps we don't even break out until we see tech earnings. But tech's already been decimated, and I'll show you on XLF. Tech's already taken a beating. It's led this market. XLF, the banks, and including a lot of the small caps, they have not been scathed at all. So they're holding up the market for the most part from total annihilation. But we'll see if that continues. And you notice this bow and arrow. We keep talking about this over and over. When we broke above it, just kind of firmed up above it. So I'm still, this is actually more of a bear setup for me than it is being bullish, because we're right at the trend line. We break above it and that completely flips. That's what we are. We're traders. So we'll flip our whole scenario to more of a bullish count. Maybe this is a 1-2 setup, and we have a lot more to go for wave 3. And I'll even give you a little bit of a count on a lower time frame. But let's just keep it simple. There's a triangle. We break above, bullish, break below, bearish. But with a caveat, I'm bearish until we break above. So I'm bearish all through here too. Okay. All right, let's move down to the daily time frame. Change up our board. Daily trend is my friend. All right, same thing. We had this channel here, broke down from it, back testing, held the 200-day moving average, but that's a moving average. So we just kind of, just like the supply and demand zones, they're zones. Look, we got above, broke down, above, broke down. It works both ways, even in a bull market. I'm not going to show you right now, but the same thing. He broke down from it and broke back above it. So kind of a fake. So it's more of a zone, but we're still in this realm of the moving averages coming together and really getting tight there. And so a big move is just it's just around the corner, and I'm going to keep saying that. And around the corner could be in 2 weeks from now, could be in a month from now. So be it. I mean, I'm just playing around with this for a second, because if this, I didn't draw the channel down here from the bottom, but it's very, okay. I just wanted to double check, see if it tagged any bottom part of this channel, because we left this wick out when we were drawing the channel up here, but no matter. I won't play with that now. Sorry to waste your time there. Moving on. Actually, not moving on. We're still kind of in that bear flag on the MACD and the weekly, but we made a bullish cross on the daily, so we have to respect that. We see that the daily time frame, that it's starting to firm up and get bullish, and you know, it's just all about perspective. Some people could say, as soon as it broke out of here, that you were going to be bullish since, you know, unless we break down from there. Well, I'm using this as my representative. So as long as we're under here, I'm bearish. We break above, and you see there's a support here as well, support resistance. We get on this, then we're talking firming up there for me, and we'll go bullish there. Let's go to the 65-minute chart. Well, we'll end off with that. Let's go ahead and go over to, since I want to look at a lot of these on the daily time frame. Let's look at the VIX first. VIX, it just completely annihilated and crushed. But, you know, I don't want to grasp for straws, but I do want to show you where we ended up. So you have this whole consolidation area down here, and then we have a channel, a descending channel. We made a new low from this low, and we have a bullish divergence. And give you another look at the VIX ETF. We are triangulating. We have a couple points here at the bottom, and we're not quite there yet. So perhaps we have a little bit more to go. Maybe tomorrow's a boring day, nothing really happens, and the VIX goes down. But I would consider that support again, and we'll be looking. We made a new low from here to here. So again, we have the bullish or positive divergence. You have the low here, and we made a higher low on the VIX, but a lower low price-wise. Okay, so now we're building a falling wedge into support, and that's a nice bull setup. It doesn't mean that it's going to follow through. It could break down from there, but it's a great bull setup, and so that we got to keep that in the back of our mind when we're thinking about the market, whether it's going to reverse or not. And the fact is whether you are bullish or bearish, you know, there's a mega bullish event that that I'll show you when we do a count. Here's that same thing, the DXY, the dollar starting to fall, but if we use our original line here, just extend that out for our wedge, it's just filling out the wedge more, you know. So same thing, it could still move down a little bit lower. Just want to brighten up that line for you. And we have our wedge. That's our bullish falling wedge. So, you know, all is not lost for the bear scenario, especially since we're not above that trend line, and we still have positive divergence down there as well. And then we're gonna check out XLF, and then go down to the 65-minute on ES, and then we'll try to get a count going, and we'll go from there. But here's the most important part of this video. Here's the XLF. This is the index for the ETF, excuse me, index for financials. And you know, it came down just as hard. When financials move, everything else moves with it. And financials have been extraordinarily strong. You look at this inverse head and shoulders. I mean, this thing looks like it's about to break out. So this tomorrow is going to be extremely important. Tomorrow going into next week, there's more financials next week, but we have a whole load of them tomorrow. Okay, this is our left shoulder, head, right shoulder. And also, there's a downtrend line from this point to this point, and this is our third and fourth point there. So that makes it a nice strong trend line, downtrend line. Well, that's triangulating with the uptrend line. Okay, so just like the indices, just like the main market, S&P, that's, we're on a verge of either breaking out or breaking down. And so we have to really keep an eye on that. But even, whether you're bullish or bearish, this is coming a long way. And if we go to lower time frame, we have what looks like either a corrective move or impulse. And either way, we should get some sort of pullback. It doesn't have to be 50, 60%. Maybe a pullback to test one more time and then go up. But we're looking for a pullback in this near future. Perhaps next week is it's a shortened week. Martin Luther King's birthday, but so we'll have Tuesday through Friday, so it maybe happen then. But here's our neckline. We break above that. We're just testing. We're sitting right on it with earnings coming up. That's no mistake, you guys. So a break above, and I think this market's going to lead this market to the upside. But a breakdown from here, and just watch out, see what happens, because the market should follow. Okay, and back to ES. Let's go to the 65-minute. All right, now on the 65-minute chart, smooth that over, we have an ascending wedge. So that's a bear setup right into resistance, and also that options expected move there. And that actually reminds me, I'll just zoom through a couple of names of big tech that are in this exact position. And we're tweeting those out. And so if you want to check out my Twitter, I tweet out a lot of charts on there, or the options guy. It's a free Discord, and that's where I post a lot of my charts as well. And we have this wedge here that's it's a bearish setup. We break above the wedge and this downtrend line, and we can negate all of that and start getting bullish. And we have bearish divergence as well, so that adds on to it. All right. See what QQQ has, or yeah, same thing. Rising wedge. I could go to QQQ. It doesn't matter. This is a futures. NQ, and then Apple. Okay, rising wedge. Same thing. Same thing. Keeps rejecting off the top there. Actually starting to crack a little bit, but it's still testing. Hasn't broken yet. Amazon. Same thing. Wedge actually broke out from the wedge and came right back into it. That's a fake break. It's pretty bearish. This bad daddy, Meta, has been quite elusive for my short, and we are out of the name, but I very well should have reshorted it today, but I have plenty of puts on, and I don't want to overdo it, but we're rejecting right at that the expected move for the week, options expected move. If you're not familiar with that, I do have a video on that as well. I'll put it up. I'll tag it up there. But it looks like we're finished. We're complete with this ending diagonal as well. We thought we were finished before, but we didn't think it was an ending diagonal, but I think we got that part now. So what else? You get the point. They're all kind of doing the same thing. Microsoft. Nice big move in Microsoft. It's a channel rather than a wedge, but we had this gap that was just filled today, so that acts as resistance as well, as well as the channel top. Sure, that might be a wave form. We could eke out a little bit higher. That's the case for pretty much any time you have these type of setups, so you have to be ready for that. And that's it. I'm not going to keep boring you with the same old thing, but I just wanted to point all those out. And then we'll get the wave count of what we're looking at. Get the Elliott wave count. Again, I put these on Patreon. I have all of these. I update. I put the a bunch of different stocks that we have as well for the Elliott wave counts and those sorts of things. So what we have is a impulsive wave down, and then we have an A, B, C for a W, A, B, C for an X, and then an A, B, C for a Y. And what this one turned out to be, in my opinion, is if we get a new high here, then this ends up being, it counts better as a ending diagonal. So this would be a large wave 1, 3-wave move down for 2, 3-wave move up for 3 that ended up here, and then a wave 4 somewhere in here. It could have been that 5 right at that top there, and we have the top is in. That's possible coming into bank earnings, or this was all a consolidation, and we're going to eke out one more top here for wave 5. That would be a 5-wave move for the ending diagonal. But that doesn't exactly, we would have to count this just a little bit different. But if we have the A, B, C here, that works out perfect. Either way, we're looking at this ending really soon. We're in the zone. We think that we might tag this 40-30, and I think that's mostly due to the SPX. I know I'm jumping all over the place now, but the SPX, it came close. Let's see, the top was 3997.76. Yep, so it didn't quite touch the 4,000, and the reason I think that we're gonna get that 4,000 is if we check out the AM next week. It's our options expiration, and it's such an important area. Right here is a 4,000 strike, and we have 150,000 open interest on the puts and 160,000 open interest on the calls. It's just massive. There's nothing else near that comes even close, remotely close to that massive amount of options contracts. So that's going to be some sort of gamma that we might have to deal with. Either we break hard away from it and negate all that gamma, or we get pinned to it next week. And just in case we're pinned, I did sell some call verticals today in a couple accounts, so that's an idea for you as well if it's gonna drain our premium. So the strike, I went out on my on one account I went out 60 days, and then another I just went out to the weeklies for next week. I went out to the 420s on SPY in March, I believe, and then for the near term one I just did 402 SPY, which is really close, but I don't think we'll get much above the 4,000. So all right, that's it. That's all we got. We're looking forward to bank earnings in the morning, and then we'll talk to you tomorrow and on the weekend. So don't forget to hit those notification buttons so you can get these videos often. All right, thanks for joining us here at Options Center. Don't forget to like the video, and have a wonderful night.